Welcome to this series of RI in-person interviews from the PRI in-person conference here in Cape Town, South Africa. My name is Hugh Whelan. I'm Managing Editor of Responsible Investor magazine, and we are speaking here to Adrian Bertrand, who is the ESG Manager of the Government Employees Pension Fund of South Africa. Adrian, welcome. Adrian, can you give us a bit of background to the pension fund itself, the beneficiaries you represent, and how the fund is organised?
Well, the Government Employees Pension Fund of South Africa, or GEPF for short, we're the government pension fund for all civil servants in South Africa. Because we have a large civil servant population in South Africa, we have 1.2 million active members. So every month they're actively contributing towards their retirement savings. We're a defined benefit fund, so one of the last few defined benefit funds in South Africa. And we have just short of 400,000 pensioners and beneficiaries. So the Minister of Finance is the guarantor of the GEPF. So heaven forbid we don't have the desired investment returns. National Treasury and the South African taxpayer would need to stand in for any losses or shortfalls. And so that's really the motivation for the GEPF Board of Trustees, taking responsible investing so seriously, making sure that when we do invest our members' and pensioners' assets, that we do so within our fiduciary role, looking for long-term investment returns at acceptable levels of risk, and especially looking at the role that the fund plays in being the guardian or the custodian of environmental, social and corporate governance issues across our portfolio.
Adrian, can you talk to us a bit about the main ESG themes that you're working on within the fund?
Well, the GEPF Board of Trustees has set the strategic objective for the fund to be a leader amongst its responsible investment peers. And so we've been working very hard internally as an asset owner to be an active owner, to be engaging with our investee companies in terms of the listed equity portfolio, but increasingly also in terms of our unlisted investments. Some of the things that we've been focusing on have been topical issues that have emerged in the last year or two. I think most notably labour issues, with specific reference to the South African platinum mining sector. So we've been meeting with a number of the mining companies and trying to understand their strategies around labour relations. What are they doing in terms of salaries and living wage agreements? How are they engaging with the various unions and the Department of Minerals and Resources? So last week, for instance, I actually went down a mine shaft and was able to meet with a number of the rock drill operators and to hear from them, their experiences of working as a miner in South Africa. Something else that we've been looking at is the role of our service providers and what they're doing. So the fund managers that manage a portion of GEPF's assets, how are they being active owners on our behalf? How are they exercising their proxy votes on our behalf? And really starting to interrogate what's happening on the ground in terms of our fund managers. And then we're also looking at things like stranded assets. So we're one of the biggest investors in the resources sector in South Africa and commodities.
Adrian, can you talk to us a bit about South Africa and some of the regulatory initiatives and initiatives amongst pension funds here around responsible investment?
I'm very proud to be a South African because I think South Africa has been leading from a responsible investment point of view. The Johannesburg Stock Exchange was one of the first stock exchanges to come up with a sustainability index and has done so for the last number of years. We also have very forward-looking regulatory policies for pension funds. The Pension Fund Act in South Africa, which most pension funds fall under, has a regulation called Regulation 28 of the Pension Funds Act, which requires pension fund trustees to consider all those issues which may materially impact on investment returns over the long term. And the Act itself, or the Reg 28, speaks about ESG issues being included in that. And so pension fund trustees are required by law to give consideration to these factors. Not only that, we have the Code for Responsible Investing in South Africa, which complements the King Code of Corporate Governance, requiring institutional investors to hold investee companies to account in terms of their own impacts in terms of broader society. And I think that's quite forward-looking. Both of those, Reg 28 and CRISA, are fairly new initiatives. And we're starting to see the first group of companies and investors reporting against them. It's supplier explained, so where a company or a fund manager may choose not to apply the recommended principles, they need to be able to explain why they haven't done so. And then lastly, GEPF participated in a project which is an industry-wide asset owner-driven project called the Project for Sustainable Returns for South Africa and Pension Funds. And they've issued a responsible investment guide for asset owners. So GEPF's experience has been that we've been joined by a small number of other pension funds in South Africa. We haven't reached the tipping point. And when you engage with fund managers and service providers to pension funds, their comment is that, but we're not being asked for these services, or we're not asked these questions by our other clients. So when we get sufficient people asking us the questions, we'll pay more attention. And so what this guide seeks to do is to empower principal executive officers or the CEOs of pension funds in Southern Africa, as well as trustees of pension funds, to ask the right questions of their service providers and to really develop an implementation plan to make sure that we really do start to become the custodian of our long-term best interests of our members and beneficiaries.